What's up with mortgage rates?
If you're wondering what is happening with mortgage interest rates, then you need to watch this short video. Happy Friday! This is Vic Bazarbashian with the Easy Home Network at Keller Williams. Here's part one of my recent interview with Stephen Rinaldi, owner of the mortgage broker company Rinaldi Group LLC, to find out where he thinks interest rates are potentially headed. Check this out. How does inflation impact interest rates?
I think if you've been paying attention, it's pretty clear that inflation is the driving point in the rising rate market. The U.S. government is feeling that their only solution to curbing inflation is to raise interest rates. So we saw a bump, in the October, November months that was probably one of the largest runs of rate hikes that we've ever seen. Rates went from high fours, low fives, basically pushed as high as 7. I've seen some lenders out there 7.5. So rates definitely did pop, and it was really to curb inflation. Now, I will say that recently, a lot of the data that we're seeing for inflation is improving, and people are starting to get optimistic. Also, rates have slipped probably for most lenders somewhere in the high 5, low 6 on a conventional loan. We are seeing some data points that are helping. It's hard, and I want to say it's hard because a lot of people hear, the Fed is raising rates, the Fed is raising rates, but that's the Fed fund rate that is not directly related to mortgage rates, although sometimes they do run parallel. In this case, they are not. Mortgage rates are slipping.
And you would say mortgage rates are more so aligned with, let's say, the 10-year Treasury yield, for example?
Correct. Yeah, of course.
Okay. Where do you see rates heading later this year in 2023?
Part of me is I'm always going to be optimistic. So I'm a believer that rates do get into the 4 to 5% range by the summer. That's where I would expect them if I had to take a guess. I also am not 100% sold that we're out of the woods on inflation, but I can say this, I do think we hit the ceiling of that October, November bump. I think at the worst case scenario, I think they hover in this area around like the 5.5 to 6 range. But for our purposes and for our goals, if rates slip from into that 4 to 5 range, I think we're going to see a lot of action.